It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader today. This video newsletter is brought to you by PortfolioCrafter.com.
Welcome to this edition of the TradingTips.com video newsletter. In this episode, we'll be looking at the trading strategy known as CANSLIM. According to the American Association of Individual Investors, market portfolios traded according to CANSLIM were up an astonishing 1,351.3% between January 1998 and December 2008, compared to a loss of 6% by the S&P 500. Wow. Well, with that in mind, let's begin. CANSLIM is an acronym. C stands for current earnings, A for annual earnings, N for new product or services, S for supply and demand, L stands for leader or laggard, I stands for institutional sponsorship, and M stands for market indexes. We'll examine each of these criteria individually over the next several slides. But first, a bit about CANSLIM's history and how it was developed. It was formulated by William J. O'Neill, who developed it by looking at the 500 best performing stock market winners dating back to 1953. It is a strategy based on both technical and fundamental analysis. The goal of the strategy is to find leading stocks before they make major market advances. These buy points are typically coming out of bases or consolidation points, often in the form of a cup and handle pattern formation. Okay, so first we have C, which stands for current earnings. This is growth in current earnings per share, which should be at least 25% year over year. Additionally, it's a good sign if earnings growth is accelerating in recent quarters. A stands for annual earnings growth. This should be at least 25% in each of the past 3 years. Annual return on equity should also be 17% or more. N stands for new product or service. This one can't be as easily quantified, obviously, and requires more research. What you're looking for here is a new basic idea that will fuel more earnings growth. A great example is the iPod, which sent shares of Apple soaring. S stands for supply and demand. What we're looking for here is volume, and we want to see high volume, especially during big price increases for the stock. L stands for leader or laggard. Leaders are good, laggards are bad. Normally, you want the best stock in a particular industry. How is this measured? One suggestion is the Relative Price Strength Rating, or RPSR, which measures the price of a stock over the past 12 months in comparison to the S&P 500 or another index. The stock with the highest RPSR in a given industry is its leader. I stands for institutional sponsorship. Here we're looking mostly at mutual funds, and we want to see an increase in ownership over the past few quarters. Also, the accumulation distribution rating, published by Investors Business Daily, is also helpful. Finally, M stands for market indexes, namely the Dow, the S&P 500, and the NASDAQ. The CANSLIM system advises investing during times of definite uptrends for all three indexes, as 75% of stocks tend to follow general market pattern. Obviously, CANSLIM is not an easy strategy to implement. There's no screening software you can use to find non-quantifiable things such as new products. It requires time and research. People who have put in time with the system have been successful. However, it is also a question of whether or not the time could be better spent. Another problem people have with this system is its requirement to cut losses at 8%. But the system founder O'Neill says that in order to be successful, you have to follow all parts of the system, not just the parts that you like. Recently, however, CANSLIM has not been so successful, as O'Neill's paper Investors Business Daily scaled back their index of CANSLIM stocks from 100 to 50. Nevertheless, there are some valuable insights in CANSLIM that can be implemented by every trader and investor, and they should be. But when a system is based on past performance, it should not be surprising when new situations cause it to underperform. We hope you've enjoyed this TradingTips.com video newsletter. Thanks for watching and good trading.
This video newsletter has been brought to you by Portfolio Crafter. Manny Backus designed Portfolio Crafter to be one of the easiest trading systems available on the web today. But don't take our word for it. Visit www.portfoliocrafter.com and access the free special report. It will show you how you can place profit-rich stock trades in just 15 minutes a week. Read the free report, and you'll understand how the easy money's made in the markets. To access the free report, visit PortfolioCrafter.com. Portfolio Crafter, another market-beating investment service from WealthPire. Take control of your financial destiny. View more Trading Tips videos. Visit TradingTips.com. Sign up for our free video newsletters and become a successful trader today.